Hi there, this is Mutual Fund Corner, but before we do that, it's also a lot of earnings. So we're waiting by for HDFC, and HDFC is the one that has reported its numbers. The street was working with a decline in the profits to the tune of about 15%, and that's primarily on account of lower capital gains as well as lower other income. But the company's posted a net profit of about 2,114 crores. This is pretty much in line with what the street was working with, give or take 30-40 crores on the bottom line. So our poll was around 2,086 crores. The net profit has come in at around 2,113 crores. We'll wait by to watch out for the NIMs as well as the net interest income. But the first number that we have is 2,113 crores. We also have Abhishek in the studio with us. Abhishek, what do you make of these numbers so far? Just the one number that has come by?
It's difficult to make out anything from this single number alone. But yes, as you mentioned, there were no dividend income and, gains from, capital gains, which would have led to other income. So we were working with a 15.4% decline in terms of the quarter-on-quarter profits, but it is slightly higher than our estimate. However, you need to see how much is the loan growth. Now, the loan growth in the previous quarter was around 17-18%, and that is expected to taper down to about 15-16%, given the fact that NBFCs and HFCs have seen a massive slowdown in terms of the disbursement in Q3 owing to the liquidity crisis. And the net interest margin last quarter for HDFC Limited had fallen to 3.5%. Whether or not that is sustained will be seen very closely, because they raised money at 9.5% kind of a rate, but that was for a longer duration. Back to you.
Okay, so tax expense is lower at 755 crores, and I think the revenue number flashed by 10,000 crores plus. It should come back again. The stock is actually moving off. Prakash Diwan is also on the line with us. Hi Prakash, 2,100 odd crores on the net profit. Looks good to you?
Oh, it's better than, I guess, what all of us were ready to live with. But the concern with HDFC is never the profitability. It's actually, essentially how much on a average they could kind of, keep on growing and keep that pace to justify the premium valuations. Of course, the valuations have also come a bit, off from the peaks, but still, given that expensive valuation compared to the peers and the smaller players, I think that's what we'll have to look at, whether there's incrementally enough growth. NI has actually, contributed significantly, and it's not just profit from other income.
All right. Abhishek, would the calculated NIIs make sense for HDFC, or we'll have to wait by for the presentation?
We'll have to wait for the press release.
Yeah, and I think that normally comes with a bit of a lag. Prakash, anything else that you'd want to hear from the management?
I think the commentary from the management is going to be essentially critical, because it will set the mood for the rest of the companies as well, the entire sector per se, because we have been made to believe that the quarter was tough for weaker players. The larger players had no issues on liquidity, and then that was demonstrated when the crisis took up. But end of the day, for the 3 months as a whole, what has been the impact, and where do they see, this liquidity situation taking them ahead in terms of growth and margins? I think that's going to be very critical. So their commentary on the environment, current environment itself, is going to be much more important than the company's specific objectives.
Just two more key numbers that I would like to highlight. If you look at the finance cost, that is up only 3% on a sequential basis. So that is at about 7,259 crores, and that compares to about 7,045 crore on a sequential basis. And even if you look at the expected credit loss, or let's say provisions for NPA, that is down substantially on a sequential basis. So that is down to around 116 crore, which compares to about 401 crore in the previous quarter, that is Q2 FY19. So it looks like there might have, been an improvement in their asset quality, on account of which the credit cost or the provisions for NPAs are on the lower side. And also, profit on sale of investment is at just 37 lakhs. That compares to about 1,000 crore, which is actually showing you why the profit numbers are on the lower side when you compare quarter on quarter. As we have been saying, that other income will be on the lower side, and this credit cost actually looks much better than what was estimated. Back to you.
All right, Abhishek, request you to hang in there till the time the press release comes by and we have some more details. Meanwhile, we'll get on with the mutual fund part of our show. We'll answer all your mutual fund related queries. And to help you with that, we have Mr. Harsh Rungta from harshrungta.com to answer all your queries. First up, we have an SMS coming in from Krishna Karpalim, who sends us a message from Andhra Pradesh. He has investments in multiple mutual funds, wants us to assess his portfolio. First up, thank you for joining us.
Actually, we have the portfolio. So he has been investing via SIP. He has the Kotak Standard Multi-Cap Fund, the Parag Parikh Long-Term Equity Fund, L&T Mid-Cap Fund, and the Kotak Emerging Equity Scheme. Now, Harsh, these are all, direct options where he has chosen growth. Roughly, I think he would be investing close to about 10,000 odd crores. He's looking for a time horizon of just about 8 odd years. He's not mentioned, what his goal is or how much he hopes to accumulate at the end of this. But he does call himself an aggressive investor. You think his portfolio is in line with his risk profile?
So I think some of the boxes he has ticked correctly. So he's at least done his risk profiling, he's chosen the direct option, he's chosen the growth option. I think one of the things that he probably should have done first before he did all this was to sort of estimate his goal. I'm assuming he needs it for a single goal after 8 years. This 7,000 rupees that he is doing spread over 4 funds, this assuming an 11% return, after 8 years would be worth about roughly about 11 lakhs at that time, which is equivalent to about 6 lakhs in today's money. Is this enough for him? I think that is something that only he can answer. Is 6 lakhs in today's money enough for the goal that you need? I think that is the question that you need to answer. Coming to the funds, I think if it's for a single goal, having 4 funds is way too many. He has 2 multi-cap and 2 mid-cap funds. I think he can sort of reduce it to 1 multi-cap and 1 mid-cap. In multi-cap, if he wants a standard multi-cap, he can stick to Kotak Standard Multi-Cap. If he wants some foreign exposure, depending on what the goal is, he could then, instead of Kotak Standard Multi-Cap, he could look at Parag Parikh long-term equity, because that has about 30-35% foreign exposure. From the 2 mid-caps, I would suggest you reduce it to 1 L&T mid-cap out of the 2. That is the better thing that he could do. So shrink your portfolio, but more importantly, estimate your goal, take professional advice if required.
Okay, Harsh, we'll come back to you in just a bit. Also, numbers coming out from Kansai Nerolac here as well. We don't have a poll for it, but we did have estimates from ISEC. So they have declared net sales, they say, have grown about 18% over the corresponding quarter to about 1,343-44 odd crores. EBITDA has come in at 177 crores, which is lower than the same quarter of the previous year. Net profit at 112.7 crores, so that's lower as well. We also have some comments from the management. They're saying that during the quarter, they've seen that demand was positive for the decorative segment, but subdued for the industrials. Delayed festive season, of course, contributed for good demand for the decorative portion. And that's actually commentary we've been hearing from other paint companies as well. Although the automotive and industrial products in general has seen lower demand, cost pressures continue to remain high, and they have seen some inability to actually pass on the full impact of cost increase as well. Though they do expect that going forward, the growth momentum would be good in the decorative segment as well. Any more details, Mangala?
Well, Sumera, for Kansai Nerolac, they're the most sensitive to any change in input prices, and that's because they have a higher share of revenue as compared to the others coming in from the industrial and auto segments. And I'm taking a look at their gross margins. The EBITDA margin miss has primarily come on account of gross margins, which have fallen by about 500 basis points. So the gross margins have come in at around 35%. 35%. This compares with 40%. So that's telling you the company is unable to pass on the price hike that we've seen in the crude itself. However, it'll be important to see what happens in the fourth quarter, because remember, the third quarter results had an element of some high cost inventory that they were carrying on their books. After the second quarter ended, and just as the third quarter began, we saw a decline in crude prices from $86 to closer to around $53.
Mangala, we'll come back to this. Also, some more details coming through from HDFC. Net interest margin.
Net interest margin remains stable, and that is at 3.5 versus 3.5 in the previous quarter. The spreads are, however, down only 2 basis points sequentially. As I was mentioning, the finance cost has not moved up too rapidly, so the spreads remain stable at 2.26 versus 2.28. The loan growth is at 17%. So we were working with a number of 15% sequential YOY loan growth, but that has come in at 17%. The gross NPA, I guess that's a bit of worry. That has risen to about 1.22%, and that compares to about 1.13% in the previous quarter. It is largely led by the non-individual loans, or let's say the non-housing loans, which has increased to 2.46 comparing to about 2.18 in the previous quarter. So there is a bit of sharp increase in the gross NPA of non-housing or non-individual loan portfolio, which has actually hurt. Otherwise, the individual loan portfolio gross NPA remains good at 0.68 versus 0.66 in the previous quarter. So while the growth is pretty good, pretty strong, it has not come in at a healthy rate, given the fact that gross NPA in the corporate or the non-individual portfolio has actually increased.
All right, Abhishek, thanks very much.